Hello again. Welcome to the closing bell on the 26th of July for me on the Friday afternoon. And look, the theme of the week over the last week really is, large tech stocks seeing a bit of selling, bit of results coming out, Google, that sort of thing. And they've been a bit hammered. But, that theme we've been talking about, bit of money coming out of that really large caps and going into the sort of smaller cap sector. The Russell 2000 in the US really is performing pretty well. It was actually up again last night, even though the Nasdaq had the worst night in years, down about 3.5% or whatever it was. So, that theme is developing, but it's not really filtering through to Aussie stocks yet. We're obviously very resource heavy, and I'll show you in a minute resource stocks under a lot of, or resources under a lot of pressure right now. Copper continuing to come off the boil, and I really want to talk about that in detail probably next week, the opportunity brewing there. But it's sort of an interesting set of dynamics, which is making life hard. I mean, it's not easy pickings out there at all. In that microcap space, especially, it really is tough going. So many stocks have been blasted. Only a very small subset are really trending higher at the moment. The advice out there at the moment would be don't be pushing too hard. Don't be trying to get blood from a stone in this sort of market. The ASX, gone sideways for 3 years, really. Most of the money going into the banks. For us, they're trending very strongly. But so many other stocks still struggling away. So it is a tough market environment. Maybe that can change in the next few months. Rates start coming down. This rotation in the US continues. If we could see a bounce in commodities, especially copper, which I really am interested in following quite closely going ahead. Everything can change very rapidly. But right now, it's pretty tough. So I just want to sort of show you a few different markets of what's going on, just to give you a sense of how it is out there, so we can prepare for this next few months. Hopefully we can see these rates coming off the boil and things will shift. So let's just have a jump and look at the Nasdaq and where it's at right now. So this is the Nasdaq on a weekly chart. And just a few interesting technical things for the people who like the education and I've been talking about these ranges and how there's areas inside and outside a range that often see reversals. And this being the correction in the Nasdaq from 22 to 23. So there's that range there. So if I'm just looking at that range, I will then have the areas outside the range where I think there's a higher probability that you can see a reversal and prices can head back to even the point of control, the midpoint of that wave. So that's sort of the idea of these ranges and how they develop. You have a range, often stop losses are beyond the extremity of the range. So people who have bought in the range will have stop losses below the low of the range. People who got short in the range will have their stop losses above the range. And what can happen is the market does a great job of stopping those people out, and you get this sort of widening distribution that occurs. And the midpoint of that range is like the point of control. So you often see prices oscillating around that point of control, fooling people by getting them bullish at the top and also bearish at the bottom. And then after a few series of false breaks and that sort of thing, it will then decide which way to go. So that's sort of the theory of how these sort of widening distributions occur and how it shakes everyone out, makes life very difficult. If you want me to go into more detail on that sort of thing, leave a comment in YouTube. I'll focus in the next couple of weeks maybe on things that you guys suggest that you'd like to learn. about price action because the markets are pretty tough at the moment. So why not spend time teaching you some things rather than umming and ahhing about what the market's going to do next. Um, so back to the Nasdaq, and so how I'm looking at that then is looking at that corrective wave and saying, right, well, if it is going to take off, there is just some areas where you got to be wary that it could reverse. And so you can see here the Nasdaq got all the way up pretty much exactly to that level, 618, the 618 Fibonacci, so it's 0.618 or 61% above that range. And we've seen a reversal off there quite sharply. So that's the only interesting thing about this reversal for me is the fact that it's coming from that level, that 618 level above the range, because uh, that is where a major reversal can begin from. Now, that's not to say it's not going to then turn back up at some point or how long the correction is going to go for. You don't know about that. But it's just to say the fact that it is reversing from that level is something to just take note of. We've got the weekly sell pivot last week, and we've had follow through this week. So, that's pretty interesting after a market that's rallied so crazily, even though rates are high. Who would have thought? Did anyone pick that rates would be up near 5%? And the Nasdaq's gone like that, just vertical. This AI revolution, of course, part of the mix there. So it's just something to note, but remember the weekly trend's still up. So, we're going to need a bit more data, aren't we? Before we say, okay, this is actually shifting into a correction. If we look at the past weekly sell pivots, there's one back there, quite a big sell-off. There's another one there, big sell-off. And note how the weekly buy pivot, sorry, the weekly trend shift, sorry, to the upside was a great indicator of what the market's doing. There's your weekly sell pivot. I'm really trying to confuse you, aren't I? There's the weekly trend shift there, the 10-week exponential under the 20 simple. There's a little bit of a dummy there. And then there's the weekly trend shift there. Again, a little bit of a dummy here, and then goes back into uptrend. So just saying that that's going through 5 years of data. So every now and again you'll get a dummy, but it has been pretty good at picking out these longer trends. So you wouldn't be getting too concerned until we did see that weekly trend shift. But the way it's trading, I'm thinking in a bit of time we may actually see that shift into a weekly downtrend, which may not worry us too much, right? We didn't rally with the Nasdaq, did we? So it's not like our market is necessarily going to get dumped because the Nasdaq is selling off, and we want to see a bit of money coming back into the small caps, don't we? But just quickly, this is the Russell 2000 US small cap index. And, interesting to note, isn't it? It's rallying quite strongly over this last month while the Nasdaq's been getting hammered. So that really is the biggest news of the moment, whether we are going to see a broadening of the rally. It's in long-term uptrend. So I guess you've got to give it the benefit of the doubt for now. But, if I quickly show you our emerging company index in Australia, it's not looking as fabulous, is it? The small companies in Australia, obviously very resource heavy, and resources really have been copping it in the neck. So a lot of that speculative flows really has been taken out of the market for the moment, and I'm not really seeing a big flow back in. There's a few companies here and there that are doing well, that are more in the industrial space, even water treatment and things like that, electricity services. That's on that AI theme as well, building the data centers, that sort of thing. But there's not a lot else. There really isn't. It's a tough slog when you're, especially for me and my way of trading, because I like volatility. And, that is not volatility when it's just going like that. I don't really care what the market's doing if it's actually doing something and the trend is changing. And, when you capture a trend and it actually does continue on for a bit, all of a sudden you can have a great run. In this sort of market, a lot of stocks are really plumbing new lows and still getting hammered. And the overall index is just flatlining. So, um, don't try to get blood from a stone. Don't push yourself into doing things that are just going to end up going nowhere and losing money. And for me, I'm just trying to pick up some stocks slowly for the long term, saying, well, I like them long term. I'm willing to step up and buy them and just sit on them. You're going to sit on them for a while out of the money because so many stocks are just drifting right now. But I'm just hoping that's going to change with rates coming down. So I'm just going to flick through a few commodities for you, just give you an update of where we're at on a few things we've been following. I've been looking at this oil price, and even though I've been sort of talking it up, just saying that it does need to get above this sort of mid-90s region for me to get really excited. Like I'm not entering the stocks yet, and you can see quite clearly oil prices have stopped, and I think the market knows, above there, looking great, and long-term trend shift and etc. etc. But below those lows, and it might need another leg clear out before turning back up. So that's pretty much the highest odds I see, either or. But I just want to avoid being long too many oil stocks if we do see one more leg lower before it turns up. And I think that could end up being a fabulous opportunity. If we do see a leg down over this next 6 months, a year, I think, you want to be really sharpening the pencil once we get a buy signal out of there. So undecided right now in oil, really quite dead, stuck in the middle of the range. Don't want to stick the neck out too far. I said on gold, look, it hasn't had a correction, a serious correction, since it started the rally in October 2023. So I was showing you that last week and just saying, don't freak out if you do see it coming off the boil. And pretty much that night, gold made a high. That was last week. And I was saying, look, be prepared for it to come off the boil because it is a bit overbought in the short term. And look, it has come off pretty sharply, hasn't it? Back to 23.74. And so big picture, I'm very happy to say I think it's going to be great buying on a correction because it has broken out above this sort of 3-year range, all-time highs. I think there's just going to be terrific support down there. Don't know where exactly. 2150, even all the way down to 2000. I could see it coming back to being the buy zone there of the most recent wave higher. So that's sort of how I'm seeing it. It's a bit overstretched, bit overbought. Don't be surprised by a bit of selling pressure. And if you haven't loaded up yet, that could be your opportunity on the buy signal out of a correction because the next time it takes out that all-time high, it's, who knows where the upside is going to take gold. Could really go for a big run. So just to show you, how bearish it has been since copper made that new high. I think it's worth keeping tabs on this, and I may very well really focus on this in the next few weeks because, I said at the time the way that copper moves is, constantly having these false breaks of major highs, and then, quite a serious correction can ensue, and, it did it again. But the signs were of people cottoning on to this long-term bullishness in copper. So even though we've seen this sort of false break, rallied and then smashed. In the last few instances when it's happened, it's ended up being, the end of the rally, and a multiple year sort of correction has ended up happening. Even from here, you've had quite a sharp move down from $5 back to 320 on that one in 2023, 2022. But it's back at the all-time highs again. And we know the very long-term picture is people are saying, well, it could actually really take off through this level. And, $5 has held for 450 to $5 has really held copper for decades. So we know if we do get a serious breakout above there, it can just keep going. And what we want to do is get into a position on this correction if we're bullish, because you can see it's in long-term uptrend still, that this correction could really be a boomer as far as setting yourself up for the next few years and for the bounce in commodities. Because you can see in the last few years, it is actually trending up. So if we were just to look at this trend, you can see it's made a new high there. So we're looking at these waves. It is trending up. That's from the low in sort of 2016, 2015. So if we're saying this trend is going to continue to the upside, we're saying that we don't want to see it below that $3.20. And, we can be confident of that, saying, well, I think it won't go back below there. I think it's bullish enough that it won't. So this sharp correction we're seeing is, giving you your opportunity. If it can pull back into this zone below $4 somewhere, and then we've got the next leg, and we don't know, that next leg could be the one over this next few years. So this could be the boomer opportunity. I want to go through it in more detail for you probably next week. But if you leave me some interesting comments in YouTube, I might follow. I might go look at something else that you want me to look at. And I just want to show you that commodities really are coming off the boil after a flurry a few months ago. China, their plenum, third plenum, they do it every 5 years. These command and control economies have these 5-year plans. And they didn't come out with anything. Their property market's still in the toilet, and they haven't really inspired the market thinking that there's going to be bullish demand coming out of China soon. So you can see, like here's nickel, and that crazy spike that happened, and we know with the Indonesia story, well, nickel's now plumbing new lows and looking pretty dangerous to really go back, have another leg down. Lead, similar, has turned straight back down after rallying a few months ago, going back to the lows, and aluminium as well. Have a look at this. I've been looking at that, thinking that we're getting near the lows, and it still could be when I'm looking at the long term. Got these major waves, and just keeping an eye on this sort of buy zone area. It's been major support and still could end up being. But really right now, that's looking not great, like it wants to go lower. So that's been a big change of fortunes on these commodities in the last few months. That has been a real switch that we've got to be aware of. And that in that rare earth sort of space, of course, we're waiting for the opportunity when lithium bottoms out, and it's just not yet. You can see this thing is trending pretty strongly, right? Long-term downtrend. There's your 10-month exponential, just getting hit whenever it can. No buy pivots, and heading down into the buy zone. So, this can still end up having another big wave higher, and it's heading down into that area where you start getting interested. But you need to see it actually reverse before you get too excited. So it's still months away. That could be 6 months before it ends up giving us the buy signal out of this area. So it's a wait and watch on rare earths and lithium, that sort of thing. Look at that. Wow, all the way back to the lows. Can you believe it? It's just been, and I think China's behind this. They are flooding the market and the ones that they control, trying to scare off Western competition. And it looks like it's working. A lot of the nickel companies closing down in Australia, that sort of thing. I mean, quite amazing when you think a few years ago that hyped up, it was all going to be one-way traffic, electric vehicles, the demand for all these things. But this can all still happen. Um, and this is just, the first wave. And then we've got the clear out, and then we could be on for the next wave over the next few years. So it's certainly worth watching, but you don't want to be catching a falling knife in this stuff right now. And uranium, similar story that's coming off the boil with all commodities. It really is across the board, but I still see this as very strong. Look at that long-term uptrend still in place. It's just a bit of mean reversion going on, and I'd expect, whatever low it makes, it's just preparing itself to continue the uptrend like that. So still bullish on this stuff, but it's all coming off the boil at the moment, and iron ore as well. I gave you a sell signal in iron ore back in March, and that's down at 106. It's been holding in there fairly well, but everything's still pointing lower for now and back under $100. I think on iron ore, you're going to see the selling accelerate, long-term downtrend. Fortescue Mining, I told you about it, a while ago. This was down about 18% from when I told you that in March. So, for Australia, it's just the banks really holding everything up, and commodities are a tough slog. Um, but I think on this correction, like I said in copper, you want to be watching this correction big picture and saying, well, when's my time to step up? So I think that's the theme for us going forward. Keep an eye on that Nasdaq. It really could keep going to the downside, I think, as money gets sucked out of there, goes back into smaller caps. But yeah, in Australia, it's not really seeing a flood of money coming into that microcap, small cap space. But I think, yeah, a few months. Let's see what happens with interest rates. If they can keep going down, I think everything can shift very quickly. So be careful out there. Don't take on too much risk. Don't be a hero. It's still tough, but hopefully things will change soon. All right, cheers.